Okay, well, good evening, everybody, and happy Wednesday. It is already the middle of the week, and on today's live stream, podcast, whatever you want to call it, we are going to be talking about Meta's earnings report. Now, it was a pretty bad report, and I think everybody's been dumping on Meta, sort of calling names, name calling, a lot of that stuff, but I really want to get to the bottom of the report. I think there were some really interesting things that came about out of the earnings conference call. Now, for those of you who weren't able to sit in on the conference call, if you type !Meta, META in the chat, I programmed the Nightbot to drop the link to the earnings conference call, and I would highly suggest you spend maybe an hour out of your day, out of your night, to really listen to that. Now, I wrote down some very notable quotes coming out of the Chief Financial Officer of Meta as he's sort of explaining the reasons why their capital expenditures are going gangbusters. And it doesn't seem like Wall Street is liking that at all. So we'll talk about that. We're going to talk about some of the things that Meta are investing in. Secondly, we also got some housing data again. We heard from new home sales data, so the Census Bureau released new residential sales data for September, and sales were down big of new residential homes. But I think what's going to be an interesting conversation tonight is as we really go through that Census Bureau report, it really varies based upon the region that these homes were sold. Now, not for nothing, we actually saw a big increase in sales, and this is in relation to new home sales, by the way, in the Northeast. However, there was a massive drop-off in sales in the South, as well as in the West. So we'll talk about all that tonight. We are also going to be talking about the overall general broader market, okay, as it relates to the major equity indices, the NASDAQ, the Dow Jones Industrial Average, and the S&P 500. I'm seeing some interesting action in the debt market. Did anybody notice the massive moves in that 10-year US Treasury yield today? Now, I believe as of recording this video, the 10-year US Treasury yield is all the way back down at 4%. And also the dollar. Okay, now if you remember about 2 or 3 days ago, I think this was on Monday night's live stream, we said that if the dollar can show weakness and come down and break below its 50-day moving average, now we may have a pretty sustainable rally here. Man, it's really windy. I should have put the mic in. But we may have a pretty sustainable rally here on Wall Street. And I believe that futures are up as well. So if you look at S&P 500 E-mini futures, I think we are up. If you look at the NASDAQ futures, ticker symbol NQ, NASDAQ 100, I think we're up as well, and the Dow. But before we get started, we are outside of Carnegie Hall at 57th Street. Let's see who we have in the chat. And I hope you all had a fantastic start to your middle of the week, Wednesday. So Spillian is here, says, hey Tom, I see Aaron Frazier. Otto is here, Austin City Limits, Jonathan Richards, Troy Atman is here, good to see you. I see the one and only British Gray from Tampa, Florida, always a pleasure. Sabrina Fair, Paul Greenwell, .org Rock says, good evening Tom, good evening to you too. Paul Tricky says, not for nothing, hello Tom. And Paulette says, happy Wednesday. Well, good to see everybody. Brandon Bowman says, good evening. Our good moderator, Sunshine After Rain, is here by the book. Tom Barry. Good evening, Tom. Thank you for joining us. PB on the go says, hello, everybody. Hey, PB on the go. Julia M says, spells recession. Good to see you, Julia. And I think that's all we got for right now. So we're here outside of Carnegie Hall. This is 57th Street, Billionaires Row. I was working out of the 57th Street WeWork office today. So we'll be doing the live stream around this area. Dusty Cole, good to see you. Welcome, Dusty. Brad's Brain says, Tom's run through of chatters reminds me of Romper Room Lady. Celeste Stahl says, hello, Tom. Have a great night and have a great walk. Thank you so much. Agent 88 says, I'm here from Texas. Nick is here. Time lapse says, Tom, I'm short the dollar index from around 113.5. I was pretty sure that we were near a dollar top. It was too expensive and unsustainable. This is time lapse. Yeah, well, I mean, it's interesting. It's definitely something I think we need to watch. Now, if you put a 50-day moving average on the Dixie, so the Dixie is the dollar index that measures the relative strength of the US dollar. I'll give you guys a quick shot of Central Park Tower and 220 Central Park South. But this is actually very stock market positive. And we've reviewed this before, but... Ooh, I think this guy's trying to run the red light. It's not good. We have reviewed this before, and as we've been in this massive major bear market, I think one of the things that have been really fueling it are the following. Massive sell-off in the debt market, or the bond market, in which case yields have been spiking. You know, over the past year, we've had a near 100% move in rates, along with the Federal Reserve raising those interest rates. And we're actually going to hear from the Federal Reserve next week as they meet on November 1st and November 2nd. Now, consensus is for another 75 basis point rate hike. However, did you guys see the news out of the Bank of Canada today? The Canadian Central Bank raised interest rates by a surprising 50 basis points. So interesting sort of dichotomy there. We'll talk about that. Paulette, thank you so much for joining. So I guess the main point as we do our markets review is stock market being positive now, I believe, is mainly due to a couple things. Well, number one, we've been egregiously overextended to the downside from the 50-day and 200-day moving averages. So we're sort of having a mean reversion trade right now. But also, we're getting a little bit of a bid in the bond market after just week after week of relentless hammering and pounding. That 10-year US Treasury yield. Oh, this is the backside of the New York Athletic Club. I don't think I've ever showed you guys this. So that 10-year US Treasury yield actually came down all the way to 4%. Now, if you go on TradingView or you go on cnbc.com /bonds, if you check the yield on the 10-year right now, we may break 4% in overnight trading. And we could be, as of right now, you know, at 3.99%. Now, the interesting thing is Meta reported earnings after the bell, and they were really, really horrible earnings. And I think the stock is down like 15% after hours. And although that we've been having a tech rout, so the mega cap tech rout this week, Microsoft down big off of their report yesterday, Google or Alphabet down big off of their report yesterday. Futures are green right now. So we'll have to keep an eye out. Hey, Adam is here. Says, hey, Tom from Chicago. My brother living in Brooklyn also says hello. Hey, very nice. Which part of Brooklyn? I used to live in Greenpoint, which is a very nice neighborhood in Brooklyn. D says, I believe I had mentioned it before too. Good to see you, D. Paulette, thank you so much for your donation of $2. I appreciate that very, very much. Vonda Howard is here. Says, hey, Tom and everybody. Good to see you, Vonda Howard. War Walker. Susanna H says, good evening, Tom and everybody. Nice, incredibly warm weather. Hello from Albany. Yeah, it was a really nice day out today, which is a positive because we've been having almost back-to-back days of relentless rain. We're standing right on the corner of Central Park South and 7th Avenue overlooking the Deutsche Bank Towers as well as Trump International Hotel and Tower. Now maybe we'll cross the street, we'll do one lap around Columbus Circle, and then we'll head over to the east side, the Apple store. Now that's another big tech company that's reporting earnings that I think is going to be pretty make or break, being that Apple makes about 7% of the indice. I believe they report later this week. Julia says 3-month 10-year spread spells recession. Yeah, I agree with that, Julia, but here's my take. My take is that we've already been in one, right? 2 consecutive quarters of GDP contraction signals a recession. So maybe you call me old school. I know there's some nuances, right? Many people would say, well, Tom, how could we be in a recession if the unemployment rate is 3.5% and the job market's running white hot? That I understand. Paulette, thank you so much for the $5 donation. I appreciate it very, very much. Thank you so much for the support. Now, the thing that I'll say is, so we did have a follow-through day, right? On Friday. And the sentiment still seems to be extremely, extremely negative and bearish. Whoa, check this out. So this is outside of 220 South. Those are the type of cars we see in Miami. Very seldom do we see them here. Maybe because of like the potholes and stuff, but who knows? Salvador is here. Says hello, Tom. Wow. California gas is really expensive. That's insane. Oh, Barry Bell says you grew up in Canarsie, Brooklyn. Love that. Good to see you, Barry. Canarsie, Brooklyn has changed a ton over the years. So let's just sort of do a quick review of Meta's earnings, because here's something interesting that I think is going on. So I was on the earnings call, and once again, for those of you who weren't on the earnings call and you want to listen, if you type !META, META in the chat, the Nightbot will drop the earnings conference call. It's free. You may just have to punch in like a business email to get access, but I would listen to it. And so here is my take. I'll give my broad-based take, and you guys let me know what you think. It seems as if Mark Zuckerberg and team honestly could care less about what Wall Street analysts think. And here's why I say that. You look at their capital expenditures, and they're just going gangbusters through the roof. And it seems like Mark Zuckerberg is so steadfast into investing into the metaverse, continuously pouring money into this, and it's losing money like a furnace. But it seems as if his plans for 2023 is to continuously invest into this stuff. Now, Wall Street is saying, look, we're not going to own the stock if you're going to keep doubling down on money losers. But at the end of the day, Mark Zuckerberg seems really, really convinced that these long-term investments are going to pay off. And you know what? They might pay off. I've never used his headset. I think the new Quest headset is coming out sometime next year. But I don't know. I mean, have you guys ever used any of his products? Yeah, so I know there's a lot of wind noise. I just don't have the microphone with me tonight, so we're probably just gonna have to just scrounge through it. I didn't know it was gonna be this windy tonight. Maybe as we cross over the other side of the Columbus Circle here, it'll get a little bit better. And also, they cut forward guidance, which was a big issue. So EPS on an EPS basis, so earnings per share basis, Meta reported $1.64. Wall Street was expecting $1.89. Revenues also came in a little bit high. I would say they came in right at consensus at $27.71 billion. Wall Street was expecting $27.38 billion. But yeah, I mean, I'm a little bit perplexed why they continue to double down on the metaverse. But at the end of the day, it could be a long-term bet that's just going to take a couple years to play out. So maybe this is sort of like Facebook's lost leader, or Meta's lost leader, I would say. But we'll find out. Dub says, I am a big fan of Meta. Still have strong cash, lots of cash. Yeah, I think they have about, what, $32 billion of cash on the balance sheet. Dan Zanks is my friend, works at Meta. She let me use the Oculus, her Oculus Google. Oh, you got dizzy after that? Interesting. Very interesting. David S. says, Tom, you should be a regular with Stuart Varney in his mornings. Your broad reach of knowledge and boots on the ground experience is exceptional. Thank you so much. Let me know if you guys still hear the wind noise in the mic. I may have to swap out the mic because it's like 20-mile-an-hour winds on the ground floor here. It's crazy. I'll give you a shot of the Trump International Hotel and Tower. So if we talk about Meta's sort of metaverse, it's actually called their Reality Labs unit. So if we think about the Reality Labs unit, you could think about the VR headsets, the metaverse and the like, and revenue fell by almost half. Revenue fell off a cliff. About 50% decline in revenue in their Reality Labs unit. That's down to about $285 million. But check this out. Not only did revenue, take a look at the profitability of the Reality Labs unit as we make a left here on 57th Street. So losses widened to $3.67 billion from $2.63 billion last year. So you have an environment at Meta where capital expenditures are going up, so investments are going up, costs are going up, revenues are going down into their number one sort of bet, I would say. If Meta was taking a big bet, I would say the biggest bet that they're taking right now is Metaverse, Reality Labs, VR headsets and the like. Revenues are going down and losses are widening. Now here was the outlook, okay? So I always say one of the most important things I look for on any earnings call is not really so much the earnings of the previous period, because Wall Street is very forward looking, right? If I'm gonna buy Meta stock, I don't care what they did last quarter. I'm worried about what they're gonna do the next quarter and the next fiscal year. So this is what the CFO said. So this is right outside of the Central Park Tower, by the way. If you look across the street, you'll see the Brooklyn Diner. And all the way down 57th Street, you'll see the massive 432 Park Avenue. And what a difference a day can make. I mean, yesterday you weren't able to see anything here because it was so cloudy. Now it's an extremely, extremely bright and clear night. So the CFO said, and I quote, "We expect Q4 total revenue to be in the range of $30 to $32.5 billion, and guidance assumes foreign currency will be approximately a 7% headwind to year-over-year total revenue growth in Q4 based on current currency exchange rates." So this is another thing we talked about. So not only are they forecasting revenue lower than consensus or what they originally had forecasted, but something that we've been discussing about a lot on the streams is the currency fluctuations. So Meta has a lot of their revenues coming from overseas. So if you sell a product or a service in foreign currency, well, since Meta reports in the United States, when they go to convert that foreign currency back to US dollars, if we have crazy dollar strength, which we've been having, right? I think at its highs, the Dixie was at like 115. Granted, it has come down some, the dollar, but once you go to convert that foreign currency back to US dollars, you're obviously going to be able to purchase a lot less US dollars, right? So that is going to be about a 7% headwind to total revenue, which is pretty significant. This is Carnegie Hall. Unfortunately, it has all the scaffolding around it. I think it's going to be like this for some time, maybe about a year. I see Zozo Bob in the chat. Hey, Zozo Bob. Steamship TV says, I'm listening like a podcast tonight while I batch for my blog. Thanks for talking with us. Hey, thank you so much. Appreciate that. Christian S says, somebody explain the metaverse to me. Well, I can't really explain that to you, but we can sort of talk about the financials, but look, I don't really want to be too negative on Meta. I don't really want to put too much of my personal opinions there, because at the end of the day, I think we have a very diverse spectrum of opinions on whether we think a big push to the metaverse is really going to work, right? Some people think it's goofy, some people think it's stupid, but at the end of the day, you know, here's how I think about it. Mark Zuckerberg and the people who work at Meta are 1,000 light years more smarter than me and capable than I am. And I usually like to let the entrepreneurs work and do their thing, because if you think about it, 20 years ago, you would have said an iPhone, walking around with an iPhone is crazy. Fast forward 20 years, everybody has a cell phone. Everybody has an iPhone, everybody has a smartphone. So could this be something that Mark Zuckerberg and team is just early? It's possible that they're just early. They may not be wrong. They may be just early, right? In the adoption cycle, because at the end of the day, is anybody really planning on going out and getting their Quest 2 headset? Now, maybe some of you are. Maybe some of you already have some sort of like an Oculus device, but I don't know. What are your thoughts there? Vinny Castellano is here. Says, hello, friend. Good to see you, Vinny. Yeah, Barry Bell says dollar index is down to 109, which I think is a good thing to fuel this US equities rally, right? So if you guys have tradingview.com, which is a free charting software, one of the things that I would do is throw a 50-day moving average on the Dixie, and we've crushed through that 50-day. We've absolutely ripped through that 50-day, broken to the downside. So who knows, could this be a continuation of dollar weakness? And if so, if that dollar stays weak, and if that 10-year US Treasury yield comes down, also the entire yield curve, if that comes down, I think this rally may have some more legs. So that's sort of where I'm at there. Ren 10 says, Tom, when I used the internet in the 90s, my parents looked very uninterested. Now that you're sort of addicted to it. Yeah, I mean, that's another good point, right? So I try to catch myself oftentimes when I say, oh, this new piece of technology is going to be ridiculous. It's stupid, because I don't want to be one of those people that I look back in 20 years and I was like, oh my gosh, I couldn't have been more wrong. So we'll see. But right now we are looking at the Steinway building, which is one of the more beautiful buildings here on Billionaires Row. Has a very interesting concept and a very interesting design. Now, I'm not sure what they're building here, but it says work in progress. And the anticipated completion date is June 2025. Now, it doesn't look like it's going to be too big, which is surprising, because usually anytime they demolish a building on 57th Street, they make it like some monstrosity that's some of the tallest buildings in the world. Yeah, Austin City Limits says we would be lost without internet access. So, okay, so to be fair, I think we should review something really quick. So we know that their losses are expanding in the Reality Labs unit. But let's look at some individual metrics, okay? So as it relates to a lot of these social media companies, you think about Snapchat, Facebook and the like, Instagram. One of the key metrics that Wall Street analysts look for is something called ARPU. So the acronym ARPU stands for average revenue per user, right? So average revenue per user at Meta came in at $9.41. Wall Street analysts were expecting $9.83. So we missed a little bit there, which is concerning. However, overall Facebook use was higher year over year and hit all-time record highs. Now, much of that growth came from emerging markets. I think you have a lot of saturation in North America. And I would also say, one of the concerns that I have, and let me know if you guys agree or disagree, if you look at Facebook as a platform, to me, it seems a lot of the younger, I would say maybe Gen Z demographic, tends to not use Facebook, but maybe tends to use something like a Instagram or a TikTok. So I think I would like to see a breakdown of demographics of who actually uses the platform Facebook. Now, I understand that Meta owns Instagram and other ventures, but the real growth that I think, which, if you look back throughout history, it always comes from the up and coming demographic. And if you only have, I would say, older type, maybe 40s and above, utilizing Facebook every day. I mean, look, some of you guys that are watching this channel may have kids. Do your kids have a Facebook account? I'm just trying to get a gauge here. For me, I don't have a Facebook account. I had one in college, but I just don't use it anymore. So what are some of your thoughts there? Do you guys currently use a Facebook account? How often do you use it? And if you have kids that maybe are under 15 years old or maybe under 20 years old, do they use it? Or sort of what are the platforms that they're attracted to? Juan Vasquez says, Tom, Facebook seems to be for people that are 35 and up. Yeah, I mean, Juan, I think I agree. I mean, just from what I'm seeing, I think I would agree with that. The LT Prod says Insta is the only Meta product people use today. Well, so the interesting thing is, to be fair, and not to just dump on Facebook, but Facebook, I would say usership is at all-time record highs. Hey, Carl is here. Welcome. Solo401 says, I have everything but Twitter. Okay. That's a good piece of data there. Ryan Beck says, no disrespect to the generalization. Because he says Facebook is all boomers. Yeah, well, I mean, the biggest thing for me, if I'm looking at something as an investment, I want to make sure like I'm getting on the new trend that all the kids are using, right? And if I don't see any high school age kids using it, I mean, granted, they're all using Instagram, so that's something. Ryan Beck says, no, Facebook is for people that are older than 35. Those of us that went in on beta days during college got over it some time ago, and the younger generations just don't use it. That's true. All right, so PB on the go says, my kids are aged 18 and 22. Don't use Facebook. I use it for family, and I'm old. Well, look, I appreciate the open and honesty here. And now it's not to sort of put down any other generation. We're just trying to analyze this from a financial analyst standpoint and say, if we don't have a lot of those users replaced by younger users, now I don't know how that investment thesis looks. However, I think it's fair to go on to what the reason why the capital expenditures are ballooning, okay? And I think that's one of the main reasons why the stock was down so big after hours. I think down 20%, not really because they missed on the EPS, not just because revenues were down 4% year over year. I think it's just because they're forecasting capital expenditures to absolutely take off and go ballistic. So we'll talk about some of the things that they're investing in. Brad's Brain says, Tom, my nieces and nephews do not use Facebook. They all use Instagram and Snapchat. If only Snapchat did a better job of monetizing their platform, that thing would be a big, big cash cow. But Snapchat has done a horrible job at monetization. Horrible job at monetization. And we talked about Snapchat's earnings last week. The CEO came on the earnings call and said, look, all of our advertisers are telling us that due to economic uncertainty, we're slashing our marketing budgets, right? And I think that's why you saw Google's earnings report as it relates to their traditional advertising, and even YouTube advertising was down. PB on the go says, yes, Snapchat is a big one. Christian S says Snapchat is still really popular for teens, obviously. True. Yeah, only if they had a better way of monetization. I think they'd be raking it in. Okay, so check this out. This is what the CFO says. The CFO came on the call and said, we expect 2022 total expenses to grow in a range of 85 billion to $87 billion. However, let's look at fiscal year 2023, and this is what the CEO of Meta says about capital expenditures and expenses in fiscal year 2023. He says, we expect expenses to be in a range of $96 billion to $101 billion. Okay, I'll read that again. So 2022 total expenses, as we're coming up on Fifth Avenue here, at Meta should be around $85 billion to $87 billion. However, next year, that's going to balloon all the way to $96 to $101 billion in expenses. And to use the CFO's terminology, he says that Meta is in an investing cycle or an investing stage. And that's sort of one of the reasons why I said at the very, very beginning of the podcast or live stream is that I really don't think that Zuckerberg and team care about what Wall Street analysts have to say about short-term expectations and goals. He's like, look, if you're not on board with the metaverse, just sell the stock because we couldn't care less. That is sort of the main theme that I got from the earnings call. Speaking of another big tech company that is yet to report, over here is the flagship Apple Store. And they should report earnings later this week. Mike C says, Tom, Meta is in burning cash phase. Yeah, they're burning a ton of it. I mean, the Reality Labs unit, which it seems to be where they're putting all their eggs in one basket. Although Instagram is doing well. Here's the main issue that I have. I understand that if you're going to invest into something for the long term, you shouldn't really care about Wall Street quarter over quarter expectations, right? If you're a real entrepreneur, if you really want to go after it and be a pioneer, you need to be thinking 5 to 10 years down the road. I think that's what Mark Zuckerberg is trying to do. However, in their unit where they're putting all of their eggs in one basket, their revenue cratered, got cut in half. Down 50% to $285 million in the Reality Labs unit. You would think you would see revenues spiking. At the same time, expenses are ballooning as well. But at least this quarter, that's not what we saw. So that is my concern. Juan Vasquez says if Meta makes a breakthrough, all of that money would be worth it. So I think I agree with you, Juan. This could be, it's either in 10 years, Mark Zuckerberg we're going to look back on this and we're going to say, oh my gosh, Mark Zuckerberg is a genius. He stuck to his guns. He invested in the metaverse, and now the company is valued at like $10 trillion. Or it's not going to work, right? He could also just be early, right? You ever heard the terminology that, you were right, but just your timing was off? Maybe we're just not ready for the metaverse. I've never tried it. Maybe I'm going to have to try to, try it out, see what I could do. But here's the Apple Store, the flagship Apple Store, right here on Fifth Avenue. Got Yours is to do great things. You can't compromise visions to appease stockholders, but metaverse as of now sucks. I think that's very well said, Got Your. Dan Zhang says Meta's share price really seems like a good bargain right now. I think the metaverse is a great idea in the long term, but I think Meta's timing is a bit off. That's an interesting thought. I think you may be right. I'm just not buying the stock right now. I think maybe a little bit too risky. The LT Prods is how long until investors call for Zuckerberg to be replaced? I don't think they're going to do that, but we'll see. Ryan Beck says these companies are quote unquote new relative in the grand scheme of things, and they are cyclical. Is this just another stage in their natural growth? It could be. It could be. Crypto guy is here. So speaking of 5 to 10 years, Rumble stock is something major on my watch list. Take a look, guys and gals. Also, good evening, everybody. Crypto guy, thank you so much. I'll take a look. Now, I'm not really, so for me, My investment thesis is I just can't buy anything that's really not profitable. I just can't really do it, but I'll take a look for sure. All right, I wanted to read you guys an excerpt from the earnings call because I know many of you are thinking, okay, well, if the CFO comes on the call and says our expenses were off the charts this year, oh, but wait, they're going to get even more egregious next year, ballooning to 101 billion. Well, what are you guys spending the money on? Well, I'll tell you, I wrote it down. So this is what the CFO said, and I quote. He says, "We are currently going through an investment cycle phase, being driven by two large areas of investment. Number one, or the first phase, is significantly expanding AI capacity, driving almost all of our capital expenditure growth in 2023. More expensive servers and networking equipment, and we are building new data centers for next-gen AI hardware. Number two," I'll give you guys a view of 432 Park Avenue. Number two, he says, "Second, we are making ongoing investment into our data center footprint. By bringing more capacity online, this will allow us flexibility to the types of servers we purchase and allow us to use them for a longer time period, thus over longer periods of time, bringing down that operational expense." And once he said that, I'm like, all right, that makes a lot more sense. Investing aggressively into artificial intelligence, investing aggressively into a lot of data centers to expand those data centers. Because if you think about it, all right, let me get away from these guys.
"And there came a Pharaoh that knew not the Jews. And there came a Pharaoh."
Hold on one second. So that quote sort of set me at ease. That quote sort of set me at ease a little bit because at the end of the day, it's not like Facebook or Meta, whatever you want to call it, was a money-losing company. I mean, the thing was an absolute cash cow, and they have a ton of cash on the balance sheet. So, again, not to be redundant here, but going back to what I said at the beginning of the stream, one of the main things that I said was, it seems that Mark Zuckerberg has a big vision for Meta and for Facebook. And he's like, our stock price is probably going to take a big hit in the short term, maybe 2-3 years. But if these investments really pay off, you know, we could be a $5 trillion company. Now, I'm not saying that's going to happen. I'm not saying that's how I feel. But based upon his demeanor on the call, based upon a lot of the answers he gave to some of the analysts, this guy is locked in my view. In my view. This is the very front of the Plaza Hotel. Unfortunately, it's all covered in scaffolding. It seems like almost every inch in New York City is covered in scaffolding these days, but it's a beautiful hotel nonetheless. Hey, taxi cabs, is Tom Apple? Earnings calls at 5 p.m. tomorrow. I will be on that call. I think all of you should be as well. Julia M says, but did you see the expenses Meta has for actual physical real estate? Well, I think they want to build out data centers and own their own infrastructure, right? Now, Julia, here's another question I have for you, because I'd sort of piggyback off of your point. A lot of times on this channel, we'll talk about the main thematics, right? And I always say I'm hugely bullish on cloud computing, machine learning, artificial intelligence, and that's all going to require very specialized data center hardware, chipsets, and the like. So if a company like Meta is getting together and I would say strategizing and committing to make these huge investments, what are some secondary companies that are going to benefit from all of this spending? Now, I think we'll probably save a lot of those individual names for another stream or another podcast. But it's encouraging because if you look at data center, the trajectory of spending on AI, data center, cloud computing, it's only going to go up over the next 10 years. And I think from the verbiage that was spoken on the Meta conference call, that's even more reinforcing my beliefs. But we'll see. MSK says, hey Tom, the next generation network focuses on low latency. which will boost AR, VR businesses. I think Zuckerberg wants to preempt the new market when the time comes. I agree 100%. I think it's a really good comment. You know, you're gonna need, to your point, very, very low latency, high throughput sort of applications, or what they're trying to build in the metaverse is gonna look very laggy and pixelated. The RT440 says, I predict Tom will have more money than Mark Zuckerberg in a few years. Yeah, I don't think so. I don't think so. I mean, if it happens, I welcome it. I'll just say that. But I don't think it's gonna happen. But I appreciate it, the RT440. Christian S is going to New York to start a scaffolding business. Well, I mean, there's definitely no shortage of business here. Here's another scaffolding site, and another one across the street. Hey, The Investigator. Good to see you. Thank you for joining. The LT Prod says, Tom, Meta is investing on developing hardware. Other companies will make cheap knockoffs. They should stick to software where maximum profits are. That's a very good point. And I have some experience in the hardware business. And let me tell you, it is an excruciatingly hard business to be in, and the margins are so freaking razor thin that it's all a volume play. So yeah, I'll just say that. But it's sort of, in order for Meta to do what they want to do, isn't that what they need though? They need all of these new AR glasses or the headsets. I think on the earnings call, they said they're coming out with the new Quest 2 headset. Now, for me, like, I have no desire to buy any of this stuff, but look, maybe I'm a little bit behind the curve. Who knows? Who knows? Yep, the LT Prod says hardware is tough, just ask Apple. Kevin Ramsey says, I believe metaverse is going to go to the moon. It's never going away. And you may be right. You may be right. And I'm trying to catch myself here because I don't want to pull a Matt Lauer moment. And I've sort of explained this before. I always remember that interview when Matt Lauer had the iPhone in his hand on the Today Show. Was it the Today Show or was it Good Morning America? I forget which one it was, but and he was trashing on the iPhone and he was calling it ridiculous. And I never want to look back and say I was one of the people who doubted technology and innovation. I don't want to be too negative on it, because if you have some of the smartest minds in the world, right? Just to step aside from the financials for a second, step aside from all of the numbers that we're talking about, think about the talent that is working at Meta. I mean, maybe some of you work there, right? Maybe you know somebody who works there. I could almost guarantee that the people that you're thinking about right now who work at Meta are extremely intelligent, highly capable, and very educated human beings from all over the world. I mean, they recruit the top talent and they have the best pay. So it's not like these people are all dopes and they don't know what they're talking about. So that's sort of why I try to take the back seat and say, look, where is capital flowing? Where is human capital and knowledge capital flowing? And look, I don't know. It doesn't seem to be panning out right now, but then again, maybe we'll all be proven wrong in 10 years. OF says, Tom, Meta concept is great, but tech makes the experience poor, so it's for first adopters. Zozo Bob says, the Today Show. So Joe, that's the first time I've ever heard anybody say that. It says, I prefer my Windows phone personally. Respect. Juan Vasquez says, Tom, in 30 years, I'll want VR. Imagine watching this live stream and tuning in and feeling like I'm right in New York. Yeah, that would be fantastic. And I think we talked about this too. Could you imagine putting on like a Quest headset or like an Oculus type virtual reality goggles, and I'm streaming in like a 360 camera, and it feels like you're actually walking around New York City and walking right next to us and all talking together? I think that would be interesting. I think that would be amazing. Now, here's another thing before I forget, and it's good that you brought that up, Juan. I noticed that Mark Zuckerberg, not to say he's backtracking, but one of the things that he really touched on that conference call was that the business applications for the metaverse. And this is something that I said, I'm like, if you want adoption, like real adoption for this stuff, I would say the easiest way to start is push it for business use cases. Because then, in theory, you could hire a sales team and they could make calls, set appointments, and maybe set product demos to say, look, we'll have virtual meetings and virtual get-togethers or whatever they do. I think that would be an interesting way to sort of make headway there, which they did mention. So, Ricky Ricardo says technology hasn't solved any of our existential problems, is only good for entertainment and some repetitive jobs. I would disagree extremely hard with that, but I respect the opinion. I respect your opinion. Reality effect. Yeah, so interesting stuff. To sort of touch on a couple other metrics real quick from the earnings report. Let's talk about daily active users. So I think this is, as a social media company, this is probably one of the most important metrics. Because I mean, if you don't have users on your platform that are growing, well then, who are the advertisers going to advertise to? Probably not too many people. So average daily users came in at 2.96 billion versus 2.94 billion as expected by analysts on Wall Street. So a slight beat there. Not too many categories that we could say Meta beat expectations on, but average daily users was one of them. Now, if you type exclamation point Meta, M-E-T-A, in the chat, it'll drop the link to the earnings call, but it'll also drop the link to the investor deck. So the Q3 2023 or 2022 investor deck. And notice the amount of user growth outside of the United States and Canada. That's what's really getting me excited. And the reason why I say that is because one of my biggest criticisms for a company like Meta is saturation. And anecdotally, from people I talked to, and we sort of had this discussion at the beginning of the stream, I think a lot of it's saturated here in North America, in the United States. And new adoption from younger people, Generation Z, I would say younger millennials, is just really not there. But they do have a lot of growth in Asia and a lot of growth in India as well. Hey, Julia Rosales, good to see you. Thanks for being here. Destructionist, always a pleasure to have you here. So I think technology in general, here's one of the biggest things, just to sort of touch on that comment. I think you're gonna have technology literally curing diseases within the next 10 years. If you think about like CRISPR gene editing technology at some of these biotechs, that's really exciting. So maybe we'll have a dedicated stream to that, but I'm very excited about that. Zozo Bob says, Tom, the 100-story Waldorf Astoria breaks ground tomorrow in Miami. Wow. Are they gonna do a live stream on that groundbreaking? I would like to see that. Now that's gonna look insane. That's gonna look insane because for anybody who's watched the Miami live streams, it's so, I mean, obviously Miami, I think, sits below sea level. So the buildings that are really, really tall, I mean, they look really, really tall because Miami is so flat. So that Waldorf Astoria is gonna be insane. We're standing outside the UBS building here. Also across the street is Charles Schwab, which is a broker dealer on Wall Street. And we are looking at the one and only Neuberger Berman building. And also Hilton. So speaking of Hilton, did anybody see the news coming out of Hilton Group, Hilton Hotels, as it relates to some forward guidance of what they're seeing in the future, they're seeing really no demand drop off. And that's actually really interesting because as we speak about consumer spending, consumer sentiment and behavior, all of the data suggests that we're not necessarily seeing a big drop off in consumer spending. We're just seeing those dollars being reappropriated somewhere else. And that is to entertainment, into travel, pretty much anything where people want to get out of the house and go do something. Now, on the flip side of that, studies have shown that the first thing that people sort of cut out is new technology purchases. So like of electronics, you could think about iPads, iPhones, MacBooks. And we've actually been seeing some weakness coming out of Apple. They've actually had to cut some of their iPhone 14 production just because of a lack of demand. So this may be a precursor of what we're going to see tomorrow as Apple reports earnings. We'll see. Maybe some of the services will pick up the slack. But I think if you see Apple down big after hours, that's going to pull the entire index down because I believe Apple makes about 7% of the weighting in the S&P. Hey, Temo is here. Says, hello, good night. I just got on. What are we talking about? So we were reviewing Meta's earnings report. They posted $1.64 VPS when Wall Street estimates were about $1.89. So they missed on the bottom line, but there was a slight beat on the top line. But the stock is getting obliterated after hours. And I think one of the main reasons for that is because their expenses are ballooning for next year. Their capital expenditures are going to balloon to $101 billion when their losses are widening in their Reality Labs unit. And also, did you guys see the head count? I think they grew their head count by like 18%. And we talked about the same thing last night when we were analyzing Alphabet. I think Alphabet grew their employees by like 26,000 people last year. I think they have almost 200,000 employees, which is wild, but. Juan says, yeah, it's also so expensive. Apple needs to make a big tech leap so people can give up $1K per iPhone. Well, I think they're trying to lead with lower cost devices, aren't they? I mean, I think you could buy an iPhone 13 mini for like $600, I think. I'm trying to think of how much I paid for mine. I think mine may have been like $900. We'll see. Ryan Beck says all of the TikTok videos of the employees working at TikTok and Google cracked me up. Oh, I saw those on Twitter. Those were hilarious. You're right. Yeah, I saw those as well. Now, it was very telling on last night's conference call for Google. The CEO of Google said that they want to become 20% more productive, and that probably means that they need to trim some headcount. All right, let's make a left here. Visa's $900 for a phone is crazy. Well, I mean, if you think about it, I actually think that's extremely cheap. If you really sort of conceptualize it, think about all the things that you do on your phone, right? If I didn't have my phone, I couldn't operate my business. I'm on my phone almost all day, right? From taking calls to texting clients. A phone is like an extension of you. It's almost like a supercomputer. It makes you like a cyborg, right? If you really think about it, your phone makes you like a living, breathing robot. If you think about it, I always use this example. If you go all the way back to the 1970s, and I were to talk to somebody and I were to say, who is the president of Zimbabwe? You couldn't give me that answer. You would have to go to the library, look it up in some sort of text or encyclopedia, and it's going to take you hours. Now you just say, hey Siri, or hey Google, who is the president of Zimbabwe? Boom, you get the answer in a second. So you literally have every answer to every question in the world at your fingertips for 900 bucks. Seriously. So if you sort of think about it like that, it's extremely cheap. Extremely cheap. Now, technology in and of itself is extremely deflationary, right? So your iPhone is not just a phone, it's a TV, it's a music player, it's a video camera, it's a camera. You can take videos on it. It has every single book in the world ever written digitized on your phone. So I would argue it's extremely cheap. Yeah, Juan Vasquez, that is true. That is true. Hey, Golden's Dawn is here. A pleasure to see you. Thanks for being here. Friendship Lights, welcome. So I did want to touch on one thing, everybody, because obviously the big news of today was Meta's earnings, which were down big, not good. Obviously they're investing heavy into AI, which is really going to help them with Instagram. Now, they did say they're making pretty big headway as it relates to Reels as they compete with TikTok. Now, I don't use TikTok, and I kind of refuse. But here's an interesting thing to conceptualize here. If the United States bans TikTok, I think you'll see Meta gap up like 20% after hours, like overnight. So an interesting and crazy bull thesis for Meta would be if TikTok gets banned. Because if you look at Instagram Reels, they're sort of just like repurposed content from TikTok, are they not? I don't know, maybe I'm wrong, but that's sort of my last thought there. But maybe all of their investments into these data centers and AI will pay off over the long term. But I think the most important thing to talk about tonight is some of the new home sales data we got. Whoa, look at this. This is cool. Wow, this must be like over 100 roller skaters at one time. Adam is here, says, have you seen glasses for 3D tech? I can see this being a jumping point for AI and VR. Are you talking about like the Google Glass? Whoa, look at this. Wow, look at them all. And they're all dressed up for Halloween too. Crazy, that's awesome. Look at this guy in the banana costume. You know, if we had the skateboard, we'll probably have to tag along with them. That's awesome. That must have been like 100 people. Oh, there's more. Look at them. I think there's more. These are the stragglers that can get left behind. That's hilarious. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week, between New York City and Miami. We'd love to have you guys along for the ride. Love is Kind says, yes, Tom, making reels on IG is a pain, plus the music copyrights issue. So most people make their videos on TikTok, strip the logo, and then repost it on Instagram Reels. Yeah, I mean, it doesn't seem like there's much innovation there, right? So one would think if Meta is ballooning all of their capital, there should be some most of the R&D is going into AI and data center, which makes sense. But anyway, hey, Rock is here. What's up, Rock? Dan Zhang says, Tom, will you be streaming Halloween night? You know, I may be. So I'm flying back to Miami either on October 31st or on November 1st. I have to see. I've been having some issues with, well, that's a story. I won't bore you guys with that story, but you know, anecdotally, airline costs, the flights are coming down. You know, I told you guys, usually before all of this inflation craziness, I would pay anywhere from $70, anywhere from like $55 to $70 for a one-way ticket from Miami International Airport or Fort Lauderdale to JFK or LaGuardia. Now, once we had this massive inflation boom, I was paying like 200 plus for tickets. Now, I think I bought mine at like 109. So things are coming down, which is good. Big news out of the housing sector. Big news, big stuff. So the Census Bureau released new residential home sales data for September, and sales were down 17.6% year over year, and down over 10%, to be exact, 10.9% month over month from August. And this is to be expected, right? We've been almost beating this topic like a dead horse on the live stream because you've essentially had a 100% increase in interest rates. Really quick, this is 30 Rock right here at Rockefeller Center. We are standing right on the corner of Fifth Avenue, outside of the very famous Saks Fifth Avenue. But with the 30-year fixed rate mortgage above 7%, that is really putting a cap or putting a lid on a lot of the demand for single family homes, especially new construction. So if we want to take a little bit of a deeper dive and look at some of the numbers, there was 603,000 new homes sold in September of 2022 versus 732,000 that were sold in September of 2021. So about 100,000 difference, about 100,000, a little bit over 100,000 less homes were sold. And I think that's going to continue to decelerate next month, because a lot of the deals that were closed in September, the deals were probably in progress. This is a nice Tesla, by the way. The deals were probably in progress in the summer and they closed in September. So I think we need to be aware of that. Hey, Deep Value Alex, as I understand, TikTok's algorithm is different than the United States. In a way, it promotes youths and a country's achievements. So I heard about that. I'm not sure if that's true. Now, granted, I don't have TikTok. I've never used it. But here is the theory there. And maybe it's a myth and maybe it's true. I'm not sure which one it is. But supposedly, the algorithm is different to what Deep Value Alex said. It's different in China. So the TikToks that they'll serve up to everybody in China will be like more educational based, and it sort of is an influence and it'll have an impact on the younger generation to go into like engineering fields and more educational stuff. But allegedly the algorithm is different in the United States and in the Western world to serve up nonsense, I guess, for lack of a better term. Now, I'm not sure if that's true or not, but I have heard that. But I don't know if we could... Okay, so Juan Vasquez says that is true. Yeah, look, I can't really speak on it. I'm not sure if it's true. I've never used it. Zabatara says, is fixed rate worth it for a 30-year mortgage? Yeah, I would never get an adjustable rate. I would never get an ARM. I would never get an adjustable rate mortgage. So if you look all the way down Fifth Avenue, you'll see the Empire State Building all lit up. Beautiful view tonight. It's so clear. Mike C says TikTok and education should not be used in the same sentence. Yeah, again, I haven't used TikTok. But it is, eating into a lot of other companies' market shares, such as Meta. One of the things I have noticed, and maybe you guys have noticed this too, it seems like anytime, even now on Twitter, I'm not sure if you guys use Twitter, but a lot of the times now when I'm on Twitter, if you scroll down like halfway through your news feed on Twitter, it'll serve you up a lot of videos now. And the videos are almost like an exact copycat of TikToks. And what that's forcing people to do is like reappropriate, or not reappropriate, but just rip the TikTok content off and put it on Twitter. Now, unfortunately, a lot of the stuff that I follow on Twitter is more like FinTwit, like financial Twitter. But for some reason, I still get served up like a lot of nonsense, like a lot of nonsensical stuff. Hey, what's up? Oh, yes.
From Walter Orsi?
Oh, yes. How are you?
Hey, man.
Good
I'm
to see
David.
you. Oh, David. Nice. What's your name?
Nice to meet you.
Hey, good to see you.
The whole time since the whole year thing.
How long are you guys in New York?
Since Monday.
Oh, really? Nice.
Yeah.
How do you like it so far? It's good?
Really good.
Yeah?
Pretty hectic.
Oh, yeah? Are you guys staying in the city, like Manhattan, or are you staying somewhere else?
Yeah. We're staying the 51st.
Okay. Which hotel is that? Are you staying with friends or something?
Right, so yes. Friends. Yeah,
Oh, yeah? Cool, guys. Well, that's awesome. Thank you for watching,
Like,
man.
we just got the room, our room.
Oh, yeah?
And then I watched the live and I was like, wait, he's right outside the corner.
Dude, that's awesome. Yeah, if you, how long are you guys gonna be here? For a week, 2 weeks?
I'm leaving tomorrow.
Oh, you are?
Yeah.
Okay, I was gonna say maybe Friday we could hang out after or something.
Yeah, I will.
Shoot me an email if you guys are around. I'll show you around.
All right.
But dude, hey, thanks so much for watching, man.
Yeah, man.
And enjoy New York City.
It's a really cool channel, by the
Hey,
way.
thank you, man. I appreciate that.
Yeah.
Thanks, guys.
Bye,
Be
man.
safe. See you later. Wow, those guys are visiting from Brazil. That's really cool. That's awesome. Hey, Dark Horse is here. What's up? Yeah, I mean, well, so here's another thing I wanted to quickly touch on. I think you guys would probably know this more than me. Now, supposedly, or I should say allegedly, if you talk about advertising, now let's say if you're a creator on YouTube, right? Let's say if you're making videos on YouTube, supposedly the payouts on a platform like YouTube is something along the lines of almost 10x what the payout is for TikTok. Now, I'm not sure if that's because TikTok is just harvesting all of the advertising revenue for themselves and being greedy, or maybe they charge a little bit less, like CPM, to advertisers. That I don't know, but I would like to find that out. That would be interesting. Does anybody know, or has anybody heard that rumor? Golden's Dawn says, Tom, you were way nice. Yeah, I want to visit Brazil too, my friend. Yeah. Anyway. Hemp Lord is here. Good to see you, Hemp Lord. Welcome. Got Yours says 1 minute content is so much easier to create, which is another reason why it has gotten so big, and the fact that most of us are so ADD now. Dude, that's actually really true. Now, I don't know. I think maybe my personality is an anomaly. I actually don't like short form content for whatever reason, because especially as it relates to like a lot of the financial content, there's tons of financial content on YouTube, and unfortunately I've been exposed to some financial content on TikTok just because some of my friends will send it to me because it's sometimes it's so egregious that it's kind of funny. And I just don't think that, I don't know. Maybe look, I'm a weird person. I could tell you guys that. I just don't. I'm not a big fan of the short form content, but look, it works and it makes these companies a lot of money. So I say, double down, triple down on it. It's just not for me. You know, I guess it depends on what type of short form content it is. I think short form, I should say, content as it relates to the financial industry, I think is a little bit, I don't think you could do it in a way where the viewer would get value from it, in my opinion. Now, you could grow a channel huge by doing it, but I don't really think you're doing the viewer justice, in my opinion. Now, I could be wrong, but some other short form content is great, which I actually do watch, by the way. Mostly like a lot of history stuff. Now, there actually is a guy in the city that I really like, because I'm a big history guy. I love it. I'm not sure if any of you heard of him, The Urbanist. And this guy has, I've seen him a lot on the YouTube Shorts. And he goes around to different places in the city, like places that you wouldn't even think to look at, right? You wouldn't think it's like a big deal. But he gives you this very condensed and consolidated history of that particular monument in New York. And I think that is awesome. So I think that content works, and I like watching that. You know, speaking of that, I was just watching one the other day. You know, we may walk past it. So at Herald Square, there's like this weird looking monument with a bunch of owls around it. And supposedly it has like a lot of significance and history to the city, which I never knew about. Maybe I'll take you guys over there today. Okay, Vonda Howard, yeah, you've seen it, The Urbanist. Reality Effects is agreed. All right, so guys, we are walking down 5th Avenue, 42nd Street, 5th Avenue. This is the New York Public Library, or the Stephen Schwarzman Building. And we'll just quickly review the housing data one more time, because I think it's important. You know, last week we heard from the National Association of Realtors as they released their existing home sales data, which came in really negative, by the way. But this week we got new home sales data. So the Census Bureau released new home sales data for September, and they were down 17.6% year over year and 10.9% in August. Now, if you want to talk about the exact numbers, I'll give you guys a nice view of the Chrysler Building as we're doing this. This is looking eastbound on 42nd Street. But if we want to talk numbers, it was about 603,000 new construction homes that were sold in September. But if we think about how many new constructions were sold in 2021, September 2021, it was about 732,000. So big declines there. Now, I always say, even though it's important to look at the year-over-year trends, I think it's more important to look at month-over-month trends, because month-over-month trends, you're more likely to catch an emerging new trend, right? So if you think about from month-over-month, we were down 10.9% from August. So you're seeing steep deceleration across the board. So not only are we seeing this in numbers such as the Institute for Supply Management PMI numbers, they've been consistently rolling over. We saw this the other day as we did an entire live stream talking about the S&P Global PMIs. They're rolling over quite aggressively. The Empire State Manufacturing numbers, they're rolling over quite aggressively. And I think this is all due to this higher interest rate environment and quantitative tightening. And speaking of QT, 5 basis point rate hike next week at the Fed's November 1, November 2 meeting. I do have to ask you guys a question, because we did hear from the Canadian Central Bank, the Bank of Canada, and I think they actually surprised with a 50 basis point rate hike. So could this, so could this potentially be a precursor of what's going to happen at the Fed's meeting? Do you think the Fed is going to surprise and raise rates by 50 basis points? What are your thoughts there? Hey, Tom G, what's up? Troy, this is Tom. What do you think of the streaming platform Twitch? I think they're owned by Amazon. Says it's mostly gaming platforms, but many YouTube streamers are posting there. I think you're right, but I don't know. I don't know if we could stream on Twitch. I don't think we're allowed to do 2 things at once, are we? Maybe I'll look into that. V says, what about that guy, Tom? He's just a guy that he'll always walk up to you and like grab at you. And like he always pulls on my arm and asks me for money. You could ask me for money, but I just don't like people pulling on my arm. Carl says Bank of Canada did it to cool demand and bring inflation down. Wonder if it'll work. Well, they came out with a lighter than expected rate hike though. Mike C says if we only do 50 basis points, we'll do hikes for 2 more years. Yeah, maybe. Well, the interesting thing though, Mike C, yeah. Okay, so here's the interesting thing that I think could be potentially, well, is bullish. This is historically very, very bullish. And it has to do with interest rates. So we're almost seeing a decoupling here between the dollar and bond yields. So what do I mean by that? And we sort of reviewed this at the beginning of the stream, but I think it's important to review it again. Now, once we got our follow-through day on Friday, which was I think the 5th day of a rally attempt where the market closed below, or market closed higher than its previous close on higher than average volume, the dollar started to roll over, or the Dixie started to roll over here. But it's getting windy. But along with the dollar, we've been seeing that 10-year US Treasury yield come down quite substantially. So I think as of doing this video, the 10-year US Treasury yield is now at 4% even. Now, if you guys look at cnbc.com/bonds, it's very possible that right now we've broken back into the 3% territory, maybe like 3.99% on the 10-year, which is very possible. But if we have the dollar really cracking here, which I think it may, now maybe this is just a short-term top in the dollar, but we've cracked the 50-day moving average quite ferociously. Let's just say that. And I think the Dixie is at 109. Reality effect. You know, we'll talk about that too. Ooh, it's getting very windy here. Let me give you guys a view of Grand Central Terminal. Now that's another interesting thing that I think we need to watch too. Has anybody been watching the price action of Ethereum and Bitcoin? Now, even if you're not into cryptocurrencies, I still track the main 2 cryptos. I think you could call them like the blue chips. And Bitcoin and Ethereum are getting a pretty nice bid here. Now, I actually thought that we were going to break down rather harshly to the downside because the price action in Bitcoin was reminding me a lot of 2018. Now, does anybody remember the volatility contraction in 2018 before we blew wide open in that huge dump? I do, and it was pretty aggressive, but that actually marked the bottom of the Bitcoin bear market in 2018. But I think Ethereum was up 20% today, something crazy. Bitcoin was up 5%. We've broken above the 50-day moving average, but we're rallying into a declining 200-day. So this is sort of how I piece together the market. Number one, we have dollar down, so Dixie's down. Number two, we have that 10-year US Treasury yield coming down, so that means people are buying bonds. We have stocks up and we have cryptocurrencies up, which would make sense because as of now, the market is viewing Bitcoin and other cryptocurrencies as risk-on assets. And as rates have been going up, cryptocurrencies have been getting pounded. Hey, JR is here. Says, hey, Tom, good to see you, JR. Thanks for being here. Stephen Bates says Ethereum was really up in the last 2 days, like 20%. Yeah. Dr. Longest is here. Welcome. Robert says San Francisco housing is dropping, which is good news, right? Which I think is good news, especially for those people who are, let's just say, new home buyer prospects. Hey, Meryl is here. Good to see you. Marilyn from Murray Hill. Michael Joseph says, Tom, isn't Bitcoin down more than 60% from all-time high in 2021? That's some bubble. I feel bad for people who bought the all-time high. Yeah, I mean, you could say the same thing about, Meta. That's probably down 90% now after hours, right? But yeah, I think Bitcoin is down a little bit more than that. I think it's down like 72% from all-time high. But I'll say this. If you look at a lot of these very high beta, frothy, speculative growth stocks, these things are down quite literally 90%. You look at Teladoc, you look at Twilio. A lot of these, I would say, COVID darling stocks, like the Zooms. I think Zoom is quite literally down 96% from all-time high. So definitely plays into the rate change narrative for sure. E. Monica B is here, says, hey, Tom, good to see you. We are standing on the corner of East 38th Street and Park Avenue. Very quiet over here. I kind of like this neighborhood a lot. Hey, Braz, Oliviara says, hey, Tom, from Brazil, from Rio de Janeiro. Good to see you. We actually just met some viewers from Brazil today. They're in town for a couple days. Deep Value Alex says, the nation's report card just came out and we dropped scores to levels to like 3 decades ago. So tomorrow, I think, is when we're going to get the GDP printout. Is that correct? Aren't we getting our GDP printout tomorrow? Austin City Limits. These markets are going to be very, very interesting. Indeed, they will. So in 2 more blocks here, we're going to see an amazing view of the Empire State Building. Disney Hatch is here, says the city looks lovely tonight. Hey, Disney, good to see you. The one and only Western Mass Dave says, hello, guys and gals, been listening. Very tired. Well, Dave, please feel better. I know you may be still sick, so please feel better, my friend. Michael Joseph says, the same thing happened in early 2000, all the spec stuff. And the entire tech/NASDAQ was in a bubble, didn't recover for 5 years. Yeah, it's a very good point. So to piggyback off of what you said, this has been a very, very ferocious bear market. And bear markets tend to have sort of two main factors, or I would say one of two main factors. And number one is either a price correction or a time correction, or both. So what do I mean by that? Well, I would say in the 2020 bear market, which was the C19 bear market, that was a bear market in price duration, right? So prices fell off a cliff. The indices were down over 30%, but it wasn't a correction in terms of time. And we haven't really had a bear market, I would say, since 2008 financial crisis, where we had a time duration bear market. Now, I guess you could maybe say like the taper tantrum from 2014 to 2015, but that was nowhere near as ferocious as this sell-off. I mean, to your point, right now, especially some of the high beta growth stocks like the, I would say the Cathie Wood, ARK Innovation ETFs, a lot of those stocks are down quite literally 90%. But it's not just the price correction we've had. This bear market has been going on almost a year, right? I think it's actually been going on longer than a year if you factor in the individual stocks. Because I remember back when I was writing the newsletter, I said the indices are getting very, very thin. And I think that may have been the title of one of the newsletters that I wrote right around Christmas time. I said you have the equity indices at all-time record highs. You have the Dow Jones Industrial Average, the S&P 500, and the NASDAQ at all-time record highs. But if you look at the advanced decline line, and you look at the number of stocks that are hitting their 52-week lows, almost every single stock across the board as it relates to growth stocks was hitting new lows. And the only stocks that were holding up the indices were like Apple, Alphabet, Microsoft, and Amazon. So the market was getting very, very thin. So if you factor in from when growth stocks started to roll over, we've been in this bear market for over a year, which is getting a little bit long in the tooth. Wow, check out this shot of the only Empire State Building. This is an absolutely beautiful shot here. This is on the corner of East 53rd Street and Park Avenue. Man, really, really nice. Hey, Penelope, good to see you. Thanks for being here. Got yours. His last time the market was killing it was end of November 2021. Yeah, you're right. I think the S&P 500, and you guys, since you're next to your computers, you could probably look at the exact date. I think we put in a top on January 4th. I think January 4th, 2022 was the top in the market. Sally is here, says, hey Tom, good to see you, Sally. Captain Kirk says, hey Tom, great live stream. Would you recommend Edward Jones as a good investment firm? So I can't recommend anything just for legal reasons, but I think they're like a financial advisory service, but I can't honestly recommend anything just because I'm not a registered investment advisor. But I know of them, and I think they're just a network of advisors. But I can't tell you unfortunately, I can't say, yeah, go use them. Joseph says January 4th is correct. Copy that. Yeah, so think about it. It's crazy to say, but it's almost been a year, right? We have November, December, and then we've been in this crazy raging bear market for about a year. And a lot of people are not used to that. Because just as we've been talking about, as it relates to quantitative easing, ever since 2011, this market has been in gear. And that has been due to endless money printing. It has been due to artificially suppressed rates and the expansion of the Fed balance sheet. Hey, Matt S. says, yo, Tom, sorry I'm a little late to the chat. How's your night going? It's going good. It's actually a really nice night here in Manhattan. It's finally not raining. It's a beautiful night. Everything is cleared, and we are making our way to Koreatown. This is 33rd Street, headed southbound. But I hope you're having a good one too. Yeah, Michael Joseph says the free money train came to a halt. Indeed it did. You know, I think we could just revert back to the old saying of don't fight the Fed. Oh, here's another good shot of the Empire. Hold on, I'll show you. Hey, Davi Muniz says, hey Tom, it was really cool meeting you earlier tonight. Ah, awesome, man. Well, please enjoy New York City for the remainder of the time you're here, and get back to Brazil safely. It was nice meeting you too. All right, so I wrote down some key technical levels that I think we need to watch for. So before I jumped on the stream, I pulled up TradingView, and here's a few key technical levels I think we need to watch for, okay? So the S&P 500 closed today, I think at 3,830. It's right at its 50-day moving average. Now, if you notice today, we had a big rally day on Wall Street as it related to the S&P 500. We closed almost at the dead low of the day. Now, that doesn't necessarily mean the rally is done, it's dead, it's over. I think it's justified, you know, a day to sort of consolidate, congest here. But if we can break above the 50-day moving average, which is essentially right where we're at right now, and we could have additional follow through, I think tomorrow, Thursday, if Apple reports a great quarter, that could save the market. If Apple bombs and they bomb bad, I think all bets are off. But then the next level we would look at is the 200-day moving average, which is right at 4,100. And those are the key levels on the S&P. Now, if we want to turn to the Dow, let me just cross here. I thought that truck said Manhattan Beer. Manhattan Beer was one of my first customers from back in the day. All right, so Dow Jones Industrial Average closed the day at 31,839. It is sitting above its 50-day moving average. Now, the next target would be the 200-day at 32,600. The NASDAQ, so the NASDAQ composite, is sitting at 10,970. We are below the 50-day moving average, and we have the 50-day and the 200-day curling and pointing to the downside, but the NASDAQ's 50-day is at 11,380. The 200-day moving average is at 12,400. I think those are the two key levels to watch. Now, I think it's possible to get there under two specific circumstances. And in my opinion, here are those two specific circumstances. We'll walk down two more blocks and then we'll cross over because that'll get us to Madison Square Park. The two circumstances in my view is this. Number one, the Dixie staying below the 50-day moving average. So right now the Dixie, or the dollar index, is at 109. It broke the 50-day and it broke it pretty hard. Broke it pretty bad. Number two is that 10-year yield stays and breaks below 4%. I think right now there's been a big bond buying binge on Wall Street. A little bit of a correction here. I think 2 days ago is when bonds sort of bottomed out, at least for the short term. Right now, that 10-year yield is trading at 4.001%. The high in the 10-year yield hit on October 22nd when the yield reached 4.332%, okay? So again, if you go to tradingview.com or any type of charting service that you please, if you look at the chart of the 10-year US Treasury yield, again, not the bond, look at the chart of the yield, we topped out on October 22nd. And I think we actually did a stream on October 22nd saying that if you actually look at the candlestick pattern, it was a really, really sort of aggressive, what they call like a hammer topping pattern. Now, again, I'm not saying that yields have topped for good, but if we have a couple weeks where the 10-year yield stays stable here, or at least comes down a bit more, and we have dollar weakness, then I think this rally could probably be sustained to the 200-day, in which case we'll probably roll back over. But that's sort of my take on those key levels. What are your guys' thoughts on that? I would love to know what your thoughts are. Hey, Sheriff Brothers is here. It says, Tom, is there work opportunities in HR in New York for foreigners from outside the United States? Yeah, I would say 100%. Now, the one thing I would say about that though, if you want, usually how it works, and I'm not really too specialized in immigration and visas, but I think one of the easiest ways is to get a company to sponsor your H-1B visa, in which case, if your lottery number gets picked, that is probably the most seamless way or the most sought after way to come to the United States. But yeah, I think there's tons of opportunity here. Yeah, Andreas Alpha says, do you have work authorization? Yeah, I think that's why. Now, what is the college visa that a lot of people get? The J1 visa? I think you get a J1, then you can apply for an internship. If you do well in the internship, then maybe the company will sponsor your H1B. And if they do sponsor the H1B visa, I think you have to get your name called in lottery. I think, but. Hey, Line Sync, good to see you. Thank you for joining us. Sparks Carnival says, Tom, Mattel and Hasbro offering big promotions ahead of the holidays. They're raising prices due to supply chain issues. Consumers still spending less on toys. That's interesting. Do you have an article that says that? I would like to read that. Check out this view of One Vanderbilt. Joseph says, are you short the market? I am not. Hey, John says, hey, Tom, just joining. Good to see you. The LT Prod says the VIX is at its lowest level in a month. That's true. Where is the VIX trading at right now? I think it's all the way back down to 23? That's another thing that's helping out the rally. The VIX is down. We have the dollar down. But the only thing that I'm concerned about is these earnings, and earnings have not been too stellar. You know, we started off with the banks. I think net income across the board at a lot of these investment banks, we're down about 41% on average. Now, obviously, we talked about why. Obviously, less than stellar investment banking fees due to IPO activity falling off a cliff. But I think if you think about, you know, advertisers like Snapchat, Meta, like we saw today, people are cutting back. Companies are cutting back on their marketing spend. Hey, got yours says, I tell you who should. Oh yeah, McDonald's is reporting tomorrow. I think you're right. You know, another company, to sort of get off the doom and gloom train here, there was a particular company that reported very good earnings today, and that was ServiceNow, ticker symbol NOW. Now, ServiceNow is an enterprise software company, and the CEO is Bill McDermott. And they actually had a pretty good quarter. Now, I wasn't on the conference call because obviously Meta was reporting, and that took up pretty much all of my time. But ServiceNow had a great quarter. You know, during the bull market, that was one of my best performing stocks. It was ServiceNow and Atlassian. Bill McDermott is a fantastic CEO. Now, the only thing I know is that the stock is up, I think, something like 12% after hours. And the reason for that is because if you think about a company like ServiceNow, It's going to be really, really difficult. We'll stop at the red light here. It's going to be really, really difficult for enterprises to cancel their service now. And it's obviously built on a reoccurring revenue structure, a SaaS structure, sort of like a software as a service structure. So if you think about what ServiceNow is used for, like a lot of ticketing. So one of the things that I use, I'm familiar with ServiceNow, is we build a lot of platforms and portals for customers that want to order specific devices or they want to order additional software licenses. So we have to API into their ServiceNow so we can get alerted through tickets and things like that. You say, okay, place 10 orders for 10 units for, the nurses at Mount Sinai or the nurses at New York Pres, something like that. So those big enterprise software that essentially runs your entire operation, that's like a must-have, right? It's not what you call a nice-to-have, right? Now, Zoom, for example, that's sort of kind of like a nice-to-have, because if you're paying for Zoom subscriptions, but you also pay for Microsoft 365, well, you get Microsoft Teams for free. So why on earth would you pay up for Zoom? Maybe it's a better interface, right? Maybe it's better UI. But during hard economic times, if I was the CEO, I'd say, look, can this? Get rid of it. We already have Microsoft Teams for free due to our MS 365 suite. We'll just use Teams. So I think maybe just the software is a little bit more sticky at like a ServiceNow. Sparks Carnival says Microsoft said today that the video gaming sector is resilient to economic downturns. I think I'd agree. Now, Sparks Carnival, question for you and question for everybody in the chat, because I didn't have time to do a deep dive into Microsoft because I was so preoccupied with Google and Meta. However, I was quickly scrolling through some of the financials of Microsoft, and I think the only line item that was down was, I think, their gaming unit, right? For what is the console that Microsoft makes? I'm blanking on the name. Maybe you guys could help me out. It's Xbox. I think revenues were down. So it's interesting they would say that. I think. Is that true? I think they were down. The LT Prod says the town where I live just switched from Zoom to Microsoft Teams for their meetings. That's probably why. It's probably because they're getting it for free. Xbox, you're right. Elliot Wave Reviews says Google Hangouts is also 100% free. I've never used Google Hangouts. So in my work life, and let's see what you guys in the chat use. So here's the top 3. I'll give you my top 3 that I use every day. Number 1 is probably Teams. Number 2 is probably Zoom. And number 3 is my all-time hated, which is Cisco WebEx. But what sort of video conferencing software do you guys use in your day-to-day work life? But my least favorite out of the top 3 that I use is Cisco WebEx. I just can't stand it. John says, why was Xbox revenue down? I don't know. I didn't have time to look into it, but Sabrina Fair says Microsoft Teams principally. And then we use Zoom and WebEx. Dusty Cole says we use Slack. Okay. Wayne McKay says WebEx. CM says Zoom. NJ15 with the Microsoft Teams. All right. Elliot Wave Reviews says Cisco WebEx is the worst UX ever invented. I would agree with that. It's very difficult, especially if you're giving product demos, which I do a lot. Wow, we actually have some people that use Google Meet. That's really interesting, actually. Mimi says, Teams, Zoom has said not to be safe. Really? Is that true? Zoom is said not to be safe. Now, I did read some things during the pandemic that a lot of school districts that were using Zoom were getting their like classrooms hacked. But I think they fixed that. Who knows? All right, everybody. Beautiful view of the Flatiron building here. Only problem is it's covered in scaffolding as usual. Tariq Khan says at least WebEx's original Teams is garbage. I don't know. I mean, you know, here's the thing. Maybe it's because I'm just so used to using Teams that I like it. But, you know, it's sort of that old concept. If you're used to using something, you're gonna adapt to it. But so I'll give you here's my issue with Zoom. Anytime I get a Zoom meeting from a client, I hate the fact that when I click on the link in the email, it brings me to a web page where I have to type in the conference ID. And it will not let you copy paste the ID if you're on mobile. So I have to like flip back and forth between the email and this and make sure not to close out the screen. And it's a horrible experience. With Teams, even if I don't have the app downloaded on my phone, it just says, do you want to join as guest? You click yes, and you're in. So I hate the conference codes and I hate the conference IDs. That is my biggest pet peeve. Brad's Brain says Teams is all I use at work. Teams is so easy to use. Right on. You know, another big thing that I think Microsoft is really going to dominate with is cybersecurity. Because I believe they are going to start integrating a lot of free cyber tools and bundling it, for lack of a better term, into like their MS365 Microsoft Office subscriptions. And that's sort of a way to gain market share by saying, look, if you're gonna get 365, you're also gonna get Teams and you're gonna get cybersecurity, you're gonna get Microsoft Intune, you're gonna get everything. So. Michael Joseph. Michael Joseph says Azure DevOps services with Microsoft Teams is a powerful tool. So Michael, how did Microsoft Azure, how did their numbers do? I think that was a big bright spot on their earnings. Brad's Brain says, I interviewed many prospects during COVID. Like you say, you could send an invite and it was simpler for them to utilize. Yeah, I think you're right. I think you're right, Brad. Eyeglass Lady says, I'm here late. Tom, Google Meets was hacked on my watch teaching with unsavory actors. Really? Really? That's insane. So you were on a Google Meet call when it was hacked. Interesting. Huh. Okay. Yeah, I mean, so here's another interesting thing now that we're talking about the big, I would say, tech companies. Now, there is I'm not going to say rumor, that's not the right word. A theory. Let's just say if there's a theory on Wall Street that a lot of the alpha has already been generated in these big FANG names, right? And that there needs to be room for new leaders to come up. And I think that may be the case, but I still am bullish longer term on companies like Google, Microsoft, and Amazon, mainly because of their cloud computing units. But generally speaking, I agree. I mean, for this next bull market, you're going to want to see new merchandise. You're going to want to see new leaders that are trading at 52-week highs and really breaking out. So you really need new innovative products and services. You know, if you think about the top 10 stocks in the S&P 500 in the 1980s, it's completely different than the top 10 stocks in the S&P 500 of today. So it's very possible that we are so conditioned to think, oh, I'm just going to buy Microsoft. I'm just going to buy Amazon. I'm just going to buy Apple because they're surefire bets. I'm not saying they're not, but what I'm saying is I think we all need to be open to the possibility that these companies, if we look back throughout history, they're not leaders forever. There hasn't been one company throughout history that hasn't been disrupted and dethroned, right? If we were having this conversation when, you know, my parents were my age, we would say, oh, just buy General Electric. It'll always go up. Just buy GE, or go work for the phone company. Go buy Verizon. Well, how's that working out? So I think we need to be aware of that as well. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these about 5 days a week between New York City and Miami. And we'd love for you guys to be a part of it. This is the Chrysler Building, the very, very top of the Chrysler Building right here. And we have a gorgeous view of the Empire State Building, all lit up in the classic white. Just in case Ethereum says, what do you think about cybersecurity as a play for the next cycle? I think it's a good idea. I think if we think about thematics, right? We always say, like, what are the biggest themes? Like, what are the biggest industry themes for the next decade? Cybersecurity is probably number one or number two on the list. Now, who will be the winners out of this? I don't know. But my personal favorite, and this isn't a recommendation to buy the stock, by the way. It's just, if I had to pick a company, if we're talking about a company that has the most headway in those cybersecurity, I think it's going to be Palo Alto Networks. So if you guys have time, we don't have time to review it tonight on the stream. We've talked about it before, but the zero trust architecture of Palo Alto Networks is probably the most robust. I know Zscaler, great company, ticker symbol ZS as well, but if you want to think about who is best equipped in an enterprise environment, I think Palo Alto Networks is probably the way to go. Yeah, Sparks Carnival says you think AI, autonomous vehicles, and robotics is going to be the big themes. I think you're right. You know, what did we just talk about today as it relates to Meta's earnings, right? Their capital expenditures are ballooning to $100 billion next year. And if you listen to the conference call, what did the chief financial officer say? He said, we're going to be investing into data centers. We are going to be investing into AI to the tune of $100 billion. So I think that's important. Bowen's SO says Zscaler is really good, having worked with it before. Yeah, I agree. I actually used to sell Zscaler back in the day. Not from working at Zscaler, but we would sell it through the channel. So if anybody's familiar with like channel sales, if you work at like a big MSP, like managed service provider, or even a big telco, so chances are, if you work in enterprise sales at a telecom company, you probably have access to sell software solutions through like your channel partners, right? So you may have partnerships with Zscaler, Palo Alto, and a lot of the other MDM providers, maybe like a Microsoft Intune or something. But yeah, I agree. I think that the two leaders, I would say, is probably Palo Alto and Zscaler. Hey, Austin says, did you hear about the mayor's plan to eradicate the rat problem? Wondering if it worked. The tweet, the rats don't run the city, we do, was historical. I'm not too familiar with that. What did they say? Just put the trash away or something? I honestly don't know. I think I may have seen something like that, but... Spencer, that's a great comment. So Spencer says, I remember when IBM was big out here and then it just disappeared. So if you look at, you know, honestly, not for nothing, IBM actually posted a pretty good quarter. I'm not going to say it was a great quarter, but it was actually a pretty good quarter. But IBM has essentially turned into a big consulting company and a big services company. I think we'll cap it off. I just want to quickly review and read the statement from the chief financial officer of Meta. Wow, check out the architecture and the scaffolding on these buildings. These are beautiful. This is 895 Broadway. But the CFO of Facebook on the earnings call today, he says, we are currently going through an investment cycle being driven by two large areas of investment. First, significantly expanding AI capabilities, driving almost all of our capital expenditure growth in 2023, more expensive servers and networking equipment, and we are building new data centers for next-gen AI hardware. He goes on to say, secondly, we are making ongoing investment into our data center footprint by bringing on more capacity. This will allow us to be flexible to the types of servers we purchase and allow us to use those servers for longer durations of time, thus increasing operational efficiencies and driving down costs over the long term. Now, I don't know if that was justified for $100 billion worth of spending, but it seems like Facebook, Meta, whatever you want to call them, are making big bets in AI, obviously into the metaverse. So it seems as if they do not care about short-term thinking of Wall Street. They're willing to have their stock be pounded just to not, I would say, go along with their particular ideas of how they should run the business. So analysts will be like, you should stop spending because you're losing too much money. But at the end of the day, if you really want to grow a business, to sort of come to the defense of Meta here, you got to think 5 to 10 years down the road. And maybe that means you have to have some years where corporate profitability is impacted because you're investing in long-term, you're investing in your business for the long term. That's sort of the piece I'll say about that. But this is East 21st Street and 5th Avenue. We have another clear shot of the Empire. Michael Joseph says, Tom, did you see the open letter to Meta from one of the biggest shareholders and they ignored everything in it? I did not see that, but I would love to see it. Michael, if you're on Twitter, could you like tweet that at me or something, or send me that in an email? On Twitter, it's @WalksWallStreet. I would like to read that though. I am very interested in that. Ed T says, Tom, what do you think about Sentinel-1 growing at 100% year over year, but spending a lot of money? I think in the long run, it might be a great company. So I think it trades under the ticker symbol S. Is that correct? Hold on, let me cross the street here. Just so I'm thinking about the right company. Can you confirm that that's the ticker it trades under? I think it trades under ticker symbol S. I'm not too familiar with it. I've heard about it. But here's the thing. And so from my experience selling some of these products, over the long term, especially nowadays, if you're a big enterprise organization, you can't really have, at this stage, multiple providers of cybersecurity. I mean, you could, but companies are looking to consolidate and just go to one vendor. They don't want to go to Okta for their single sign-on and identity and access management. They don't want to go to Zscaler for their Emotet protection. They just want to build an infrastructure, right? So if you talk about like network architecture, going all the way back in the days of a traditional hub and spoke network and how you would secure that hub and spoke network. Well, back in the day, you had that very traditional and very, very basic, what's called castle and moat style cybersecurity, where you just throw up a firewall and you say, all right, anything on the outside of the firewall is a threat. Anything on the inside is not a threat. And that worked back in the day when everybody had to go to one centralized office and just work at the office, right? But we live in a very data center centric world, or vice versa, where we live in public clouds, right? So in a decentralized workforce, you may run applications through Azure. You may use Salesforce, right, for your CRM. And in which case, a traditional castle and moat style of cybersecurity is really not going to work. Oh, is this guy standing in the middle of the street? Oh, maybe he's looking for a cab. I just didn't want him to get hurt. So essentially what they're trying to do is develop a zero trust style of cybersecurity, where you connect the people in your organization to only the applications that they should be using by their permissions, right? And I think if you have a billion different software vendors, it's going to be near impossible. So from what I'm seeing is, my clients will be like, hey, we're going to run totally on Palo Alto networks and nothing else. And it seems like Palo Alto is the leader there. So I don't know, for me, there's a ton of different smaller cyber startups out there. And I think many of them are either going to be acquired by other larger companies. Now, I know Microsoft has been on a huge binge with buying these smaller cyber companies, but I don't know. I think there's only really room for maybe a couple players, especially as decentralized workforces grow. You're going to just need one central company to go to say, look, help us build out our network infrastructure, right? And I think that's one of the reasons why I'm a little bit concerned about there being sort of like a monopoly in cybersecurity. Kenneth Haggerty says, do you encounter crime on these walks? Usually only on Mondays we do. Line Sync is here, good to see you. Rich Child HM says, did anybody see Elon Musk post carrying a sink into Twitter? And he said, let that sink in. I did see that. I didn't really know why he was carrying a sink into Twitter. Supposedly that deal is going to close by the end of the week. Now, how do you guys feel about that? I think we'll end the stream with that because we're going on hour 2. What are your thoughts on that deal closing? Are you bullish on that? Bearish on it? Do you think that Elon Musk will have the ability to improve Twitter, or do you think that it's not going to be in Twitter's best interest? Now, my view is I think it's going to be good. I think it's going to be a net good for Twitter. Jordan says, I'm bullish. Sparks Carnival says he'll close the deal. He has to in order to avoid going to trial, right? So he does, but here's where there's a little bit of a wrench in the plans. So I'll say this and then I got to run. Allegedly, there could be an investigation for like a national security threat, I believe, just because Elon Musk owns so many companies, and the government may block the deal. And I think that's why Elon hasn't sold any of his any of his Tesla shares yet, because let's sort of play this out. Let's say if Elon blows out his Tesla stock to fund the deal, which he's going to have to do. Number one, he's going to have to pay a crazy amount of tax. Okay, that's number one. Number two, it's probably going to make a big impact on the stock price if he lets rip, over $1 billion worth of stock. And he doesn't want to do that if the government is just going to block the deal. So it's so weird. It's like if the government blocks the deal, the government almost bails out Twitter. But if the government doesn't block the deal, that could potentially be a little bit bearish for Tesla because he has to blow out a ton of stock. So it's going to be interesting. We'll see. See Unseen, good to see you. Cayenne Pacific says it depends on what he chooses to do with the platform from here. It could be positive. Change to Twitter, however, it could be negative. The ball is in Elon's court. Those are good thoughts. I mean, if track record really speaks for anything, I think he's gonna do well. I'm seeing some mixed signals. Some people say it's going to be good. Some people say it's going to be bad. We'll see. I mean, there was rumors speculating that he may be able to, well, not be able to, but he may be threatening to fire about 75% of the workforce. We'll see. DM91. Enjoy your time in New York. Okay. Harry Connor, that's an interesting thought, actually. Jordan says he'll make them learn and more aggressive with their products by cleaning out the bots. That has been an issue. That's why I don't like tweeting about Bitcoin ever. You'll notice how I never will tweet. Very seldom will I tweet a chart of Bitcoin. Anytime I tweet a chart and say, hey, these are the key levels I'm looking at, the tweet automatically gets flooded with these spam bots. Like sign up for this coin and all this nonsense. So it definitely is a big issue. That I will say, the bots are a huge issue. It's very, very tedious. Exploration says he's already done selling stock. Are you sure? I don't think so. You could be right, but I don't think so. Yeah, I mean, it's going to be interesting to see. Now, do you think that that's actually a bear thesis for Facebook now if this deal goes through? I never really thought about that until just now. You know, maybe some of the reaction to the sell-off today, I think Meta's down over something crazy like 20%. It could be because Wall Street is expecting this deal of Twitter to go through. And look, if Elon Musk, the engineer that he is, if he assembles a super team and really knocks us out of the park, that could be added competition for Meta. I mean, they already have competition from TikTok and others, so it'll be interesting to see. Wow, check out this view of the empire here. Shiva says that Musk is a loose cannon. I simply don't like him. I like Elon Musk. I think he's an interesting guy. But yeah, very controversial character. Some people like him, some people don't. But at the end of the day, I think if you're any type of big tech executive, you're not going to be liked by a lot of people. Prime example, Bill Gates. There's even these people that, you know, don't like him so much they think he's like trying to do population control, things like that. So many conspiracies. You think about Zuckerberg. I mean, people don't hate Zuckerberg. You know, you have 50% of people that love him, 50% of the people that hate him. I think if you're a public figure, right, and you're super famous, you're gonna have 50% of the people not like you. So I think that may be just normal. We'll see. Yeah, a prime example, Bezos too. Bezos gets a lot of flack. My view is that I honestly believe that people like Elon Musk, they're trying to make the world a better place. That's what I truly believe. I don't buy into the narrative of nefarious activity. I honestly think he's trying to do good. Now, people could disagree, and I totally respect your opinion. Totally respect it. But that's sort of my circumstance there. But team, I gotta run. My battery's running low, and we're already at 2 hours. Can't believe the stream is already come and gone. But we will be live tomorrow. We're going to be talking about Apple. Big stream. I hope you guys have a fantastic Thursday. We will see you tomorrow, 8:30 p.m. Eastern time. If you're new here, hit the subscribe button. Leave a like on the video. And we will see you tomorrow. So Austin City Limits, Dusty, Cole, JR, Penelope, Abdullah, everybody in the chat, My friends from Brazil that I met today, thank you so much for saying hi. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere and you just need to know where to look. Deborah S., Troy Atman, Dr. Longus, John, Stephanie, Stephen, Muhammad. We'll see you guys tomorrow. Have a great day. We'll regroup. We'll talk about Apple. Happy trading.